Hey, welcome back to The Dive. Today on the show, we will be diving into commodities. From Bitcoin exchange-traded funds, geothermal energy Bitcoin mining, to the present crude oil market, green energy's impact on the current price of oil, and the commodity that will perform well into the fourth quarter of 2021. He is the senior commodity strategist of Bloomberg and one of our regulars. Mike McGlone is joining us today. But before I bring you today's interview, consider subscribing to our channel by hitting that subscribe button below me there. Hey Mike, welcome back to The Dive.
Hello, Cassandra, and thanks for having me back.
Yeah, thank you so much for coming back. All right, so let's begin here. We see massive trading volumes of cryptocurrency ETFs on the TSX. Do you think this puts pressure on the SEC to approve a similar ETF?
Well, one of the key things that puts pressure on the U.S. to approve ETFs is the Canada ETFs, but the key thing is fund flows out of the U.S. toward Canada. That's pressure. Over 30 applications in the U.S. Yeah, that's pretty significant demand pull pressure. A lot of the ex-U.S. government officials going to the private sector typically happens. And the key thing that's really going to happen, I think it's a matter of time, is U.S. futures-based ETFs that track Bitcoin and Ethereum. Why? Because they have to. I'm come from a commodity background. Most commodities track futures. Futures are regulated by the FTC, as our Bitcoin ETF futures and volumes are positive. So I think it's going to be a baby step, but I want to end on this. The key thing about Bitcoin and Ethereum ETFs in the US, it's still a dangling carrot of bullishness until they're widely disseminated, which means complete legitimacy of the space. It's a matter of time. I still have to stay bullish Bitcoin and Ethereum. To me, it's just a matter of time it's going to come here. And Canada's success is a good example. Fund flows going up north from the U.S. should be a lot of pressure on the U.S. to say, hey, we're missing out. It's time to catch up.
Now, El Salvador has only mined around $269 in Bitcoin value, with power harnessed from a volcano. Do you see El Salvador at some point emerging as a major miner given their adoption of Bitcoin?
Well, I'm sure the number's a lot higher than that, but the key significance about El Salvador's adoption is they're part of that baby step. Now, this is one of those things that Saifedean almost predicted in his book, The Bitcoin Standard. I mean, I read it a few years ago. I completely disagreed, but every day that goes by, Bitcoin is replacing gold in portfolios, and it's potentially going to be a significant part of the global monetary system, not as a replacement to the dollar, but as a complete complement to the dollar and a replacement to gold. So to me, Salvador is just part of the trend. Other countries are following and probably should follow. And the good news is El Salvador is going to work out some of the bumps. I mean, it's just nascent technology. Something like this has never happened before, but I look at it as a friendly trend. I don't know what stops it. Expect bumps in the road. And, I see Bitcoin becoming well on the way, becoming a global digital reserve asset, the world that's going digital. But the significant thing to remember is in crypto land, crypto dollars are the most widely traded crypto assets. Cryptos are enhancing the value of the global reserve currency, which is the dollar.
So you recently tweeted that Bitcoin appears to be building a base around $40,000. How long do you think Bitcoin will consolidate at current levels until the next price move?
Well, I think that base around 40,000 is unlikely to be revisited. And now it's rediscovering its base around 50,000. That was resistance. It overshot. It went down. It's resistance kind of at the time we're speaking. It looks like it's ready to pivot above. And Bitcoin has all the earmarkings and underpinnings that it did basically at this time last year. Remember, it was bumping up and around $10,000. It was basically at that level. That was last year's average price was around 11,000. So now we're 4x above that this year. Average price this year is almost 45,000. And to me, it's just a matter of time to break out. And there's a lot of good reasons for Bitcoin to move higher. One of the most simplistic is just catching up to the performance of Ethereum. And then I look at Bitcoin, it's simplistic. Supply is going down, demand's clearly picking up, and a headline that really captured my attention this week was Bank of America adding more crypto people, crypto assets, and crypto exposure, and that's just everywhere. I see that, and based on demand pull, organic demand and interest from clients. And the way I see it's happening now is the average person, any average person running money in the world realizes not having a small portion of their funds and their assets related or in crypto is a greater risk than not having it. So you got to have something in crypto, or you're at greater risk of falling behind.
Yeah, makes sense. Okay, so let's move on and talk oil and gas. All eyes are on the OPEC meeting this week. Where do you see the crude oil market headed at this point?
In short term higher, long term lower, first of all, I have to own my mistakes. I've been wrong on crude oil this year. It hit basically a near perfect storm for higher prices. Post-COVID, stock market going straight up, OPEC discipline, unprecedented discipline, and then there's demand pull issues with supply issues out of natural gas. One of the worst ways to stay bullish energy is from natural gas. It's the worst performing commodity on the planet. You have to use your roll into contango, and it peaked in 2005, and we're still almost at about a third that price. So what I see happening in crude oil is, now that I've been somewhat wrong, I didn't think it'd go this high. Look at Brent, it's basically it's at the halfway mark from the peak in 2008 to the bottom in 2020. So it's bumping up against good resistance. But what is the end result of this? This is going to accelerate the bearish forces that were pressured crude oil since 2014 when it plunged 50%. It's going to accelerate electrification and decarbonization. And I'll leave you with this. OPEC spare capacity is still about the highest ever, around 7 to 8 million barrels a day. Now it's declining. Inventories, global inventories, are near the lowest around 2014 and 18. There's a rule in commodities: low inventories is how you make peaks. And the key thing is the U.S. cost of shale is the lowest in our database since 2014. It's around $34 a barrel. So ESG investing is kind of pushing people away, but it's that pure essence that I learned in commodities: profits and elasticity of supply. I fully expect to kick in. And this bounce now, I don't think it's different. It's short term. It's going to lead to a more enduring bear market. So put ourselves maybe just a year from now, inventories will come back up, supply will come back, and demand destruction might kick in a little bit too. People have to remember, elasticity of supply is really strong, and still there's some elasticity of demand in crude oil. That's a big difference from things like cryptos and gold. You don't really have that elasticity of supply.
So with oil prices up, do you think it has a material impact on the adoption of greener technologies?
Oh, sure. This is something that the green technologies have not had for a decade. So look at the significance of U.S. liquid fuel consumption. It's around 20 million barrels a day. It dipped, but it's the same as it was almost 20 years ago. That's only because of efficiency. Where is that going with EV adoption? I drive an EV and I love it, but it's basically a plug-in EV. I get 30, 40 miles and I plug it in. That's the technology that's available now. You don't want to have that range anxiety. But where's that technology going? Demand destruction, or I should say stagnant demand, is going to actually start declining. The U.S. is one of the best leaders, U.S. and Canada. And look at supply, rapidly advancing technology. We can create a barrel of crude oil from U.S. shale at $35 a barrel. 2 years ago, it was $50 a barrel. Where's that going in 10 years? So there's nothing good about the big picture for crude oil. Sure, there will always be demand for it, but it's being replaced rapidly. And now there's major incentive to accelerate electrification and decarbonization. These things are happening with push, and now it's going to happen more organically with some pull from prices.
Makes sense. In your most recent commodity outlook, you were bullish on industrial metals. Could you walk us through the factors that led you to being bullish here?
Well, the industrial metals, I have been bullish, but you can't ignore what's happening in China. So I'm more kind of stagnant on industrial metals because, first, on the macro, if there's any space that there should see some demand pull because of rapidly advancing technology, electrification, decarbonization, it's metals, i.e. copper, aluminum, lead, nickel, zinc, and maybe some gold and silver because of other reasons. But the problem is China's put the kibosh on that. What we're seeing happening in China, to me, is an acceleration of a process we really noticed a few years ago. That's the plunging demand estimate revisions. What they did when they cut their triple R rate was they basically told us there's a big problem. And now we're seeing all those trickle down. Evergrande, other property companies, electricity issues. This is just the kind of issues you expect in a economy that lacks free market discourse and free capital flow, and is trying to be led from the top without the free market nuances that we have up west, where market forces are greater. So to me, China's peak. Economic growth is peaked, and that is bad for industrial metal demand. It's also bad for crude oil demand now. But this is something I said a few years ago. We've had a bounce. Now it's kicking back in. It looks like it's really accelerating. And a key thing I'll leave you with, the fact that they push back on Bitcoin and crypto mining, to me, is an example of a Cold War that's brewing, and China's just getting crushed. Because I was really shocked that this country that's so gold centric and gold mining and hoarding centric or holding centric will take the risk of gold being made redundant by Bitcoin and not getting involved in that space. And then on the other side, you have the U.S., most notably Canada. Open discourse. Yes, the U.S. is debating, but there's open discourse about this new asset class. And if there's anything the U.S. is going to do, it's going to say, okay, fine, Canada's pushed back on this, one of the best examples of free market capitalism I've ever seen. What's the U.S. supposed to do? We're supposed to be a bastion of free market capitalism, embrace it with regulation. And one of the key things I mentioned earlier, the key thing that's happening in crypto land is crypto dollars. They're the most widely traded asset on the crypto assets, which means dollar dominance is increasing, which is something that's the bane of China. They just hate the fact that their GDP percentage of the world is increasing, yet the value of the percentage of yuan trading is falling behind the dollar.
Ah, okay. So what commodities do you like the most going into Q4?
Gold. And Bitcoin. The problem is you can't hold gold. I like the ones that everybody hates. And first of all, key thing to remember about gold, it's down 7% or so in the year. Everybody hates it, but it has some macroeconomic demand pull space behind it. Gold is, it's only about a year ago and made a new high. It's just a matter of time it's going to make that new high, because look at the macro. Rapidly increasing debt to GDP, QE, fiscal and monetary stimulus, debasing of the currency, gold will appreciate in value. The problem, it is a major competitor with Bitcoin. So you can't hold gold anymore without Bitcoin. I put them together. Silver's in that. Ethereum's in that. The key commodity I'm really worried about is crude oil. I think it's more likely to follow lumber. Lumber was up 120% in the year. Now it's down 10%. Soybeans were up 30% in the year. Now they're down. Elasticity of supply is the bane of most commodities, but that's the difference with gold. The macroeconomic picture is still bullish, but you got to have some Bitcoin in that space.
Great. All right. Well, thank you so much for joining us on the show again, Mike.
Thanks for having me.
To our viewers at home, thanks so much for tuning in. We'll be back again tomorrow with more great content, so be sure to hit that notification bell so you don't miss out.